Hey, what's up, everybody? Wanted to briefly introduce myself. My name is John McLaughlin. I'm a real estate agent with Keller Williams Town & Country Realty. And I want to introduce a good friend of mine, Ron Byram. He's a lender here in Tallahassee, Florida with Loan Depot. And what's been concerning me over the last few weeks with all the news that's been coming out is that there's a lot of headlines that are scary about the mortgage industry, the housing market. The doom and gloom story has been heard loud and clear by the public and by the general media. And so part of what I wanted to do is to get some legitimate factual information out about the current state of the housing market from questions I've got from buyers and sellers about how to navigate through these times and how the mortgage industry has been affected. So again, Ron is on the phone here with us today. Ron, if you want to introduce yourself, we'll jump right in.
Hey, what's up, everybody? Ron Byram with Loan Depot. I guess I need to say my NMLS number, keep it all official, 276811. I am currently the regional manager for renovation lending for the state of Florida for Loan Depot. That's been my specialty now for the last 9 years, actually, as of this month. I've been a lender here in the Tallahassee market for just over 18 years total. And yeah, John, it's been a while since we've seen things this crazy out in the market.
Yeah, and I also appreciate you wearing a collared shirt today. This is weird for both of us wearing collared shirts with everything going on, but the good news is business is still moving forward. We're not shut down. We're still helping people the best that we can. I'd say the one question I'll lead off with as we move into this is, how is your bank and how is your business adjusted to this COVID-19 situation?
Well, right off the bat, it's been 3 weeks now. I've been working at home. I got my quarantine haircut, all that good stuff going. And yeah, nice. I did have to go dig the shirt out of the closet first time in 3 weeks. So working from home has been an adjustment for us, as a lot of people in this industry have started doing that. From a business standpoint, it certainly has impacted some products, some credit qualification standards, things like that. But I will tell you, we're still doing business. March was one of the busiest Marches on record. So people are still active. People are still buying houses, looking at buying houses. So the number one for people to know is we're still doing business, and they are still able to buy houses.
Have you seen any impacts or deals that are currently pending? Has been the biggest issue been unemployment issues, or they're not financing issues per se? It's just other the employment has been the biggest impact, what you're saying?
Well, like about a week and a half ago, I had somebody drop out of contract like 2 days into it because they lost their job. That's been the only one I've directly been impacted by so far. As we've made changes in some guidelines and things, for us, the majority of those have impacted people that are new, meaning that if you were already in our pipeline, we were already moving forward, we were honoring the terms of those. Now, we do a lot of loans that we handle internally ourselves, and we're able to control that. We did have some external brokered channels, and those were some of the first ones to go that everybody was losing. Those were like your non-QM products, and those fell off right away. But for the most part, the changes that we're seeing are impacting people new that haven't gotten into the pipeline yet.
So just to clarify too, for those that may not be aware, the non-QM is more of what specifically?
So in the old days of lending, we had your regular prime lending, you had subprime lending, and you had kind of what we call Alt-A. Government products are Fannie Freddie lending, those things. And then we also have products that are called non-QM, which stands for qualified mortgage, means they don't meet certain criteria that the government backs those mortgages. They're probably more equivalent to the old Alt-A products that we used to see, more so than the old subprime.
Okay. So short of it, it's more like portfolio in-house lending, non-traditional loans.
Non-traditional loans, right. Stuff that's outside the box for your typical government loans or Fannie Freddie.
Got it. So from your bank in general, you haven't said, we're not funding you because of the situation. If people have had deals fall apart, it's mostly because of employment, not the bank pulling out of deals. Or if it has been that, it's been because of that non-traditional product.
Right. Mostly it's been non-traditional products and stuff. And there's some things even within the, your major government products and your Fannie Freddie products that we've seen changes. Right. You and I talked about VA at the beginning of last week rolled out a new circular on appraisals, and they were just trying to give guidance on allowing appraisers to do external appraisals, desktop appraisals, but within that, they dropped doing renovation appraisals. They cut back on the VA jumbo, some of the things they'll do there if it's an external appraisal. So even the agencies are making some changes that are impacting us right now.
Gotcha. We'll dig deeper into that in just a little bit, but you have a great point. I'll earmark that for later. But as far as the requirements for getting financing, I'll kind of dig deeper into what we were just talking about with the changes in the industry. You're hearing some stories, or I know I've seen some headlines about Chase, for example. They're a big bank, and they have their minimum, or at least their headlines are all saying in these reports coming out that they're now requiring 20% down and a 700 credit score. Is that industry-wide? Is that just with Chase? Or can you kind of explain what that really is and how that affects the market?
Sure, that's Chase. So number one, just a couple things that maybe people don't realize. Mortgage-backed securities have a tremendous impact on this business in a lot of ways. It's really what sets the pricing for the lenders. It's what sets the appetite for what's being bought as far as the different types of paper. And the way mortgage-backed securities have been impacted by this crisis is setting the tone for a lot of this. So the appetite for your riskier paper has really deteriorated. So lenders are tightening up their guidelines. It's making it to the front lines. Every lender is tightening the belt, according to what they feel fits them as a company. So, I'll give you an example. We raised our FHA required score at the moment by 100 points, and that's fluid. It could change again today. But for us, that was going from a 520, which is what the agency actually requires, up to a 620. A lot of lenders already, may have required a 620, previously, but I've seen some go up to 660, 680, 700. Some have dropped programs entirely. I've seen lenders get completely out of VA, or completely out of FHA, or completely out of renovation lending. So it depends on the appetite of the individual lender.
Got it. So to be more specific on that, it really is lender specific on any changes that are being made on how they're addressing their qualified loans back to the investor. So why would they do that? Why would they make those changes, even though that the agency themselves doesn't require it?
Well, the paper still has to be bought. You still have to have investors that are going to buy the paper. And if the market is driving people to be more risk averse, they're waiting to see how things are going to settle before, the value to some of that paper is going to come back.
Got it. So you are still seeing deals being done, even though they may be at a higher credit score. And are their down payment requirements changing, or are they still specific to FHA? That's 3.5%. Conventional, depending on the type of conventional loan, 3 to 5%. VA is still 0%. Has anything changed for the down payment requirement?
Not for your standard stuff, not at the moment. I mean, sometimes on refis, lenders might throw in some overlays for things, requirements. But for your purchase folks, they can still get 3.5% FHA. They can still go 0 down on USDA or VA. There's still 3% down options for conventional. Those are still in play.
Got it. And just to confirm for the listener that doesn't understand, the overlay is that rule on top of, we'll call it the rule, that he was mentioning, going from the 520 to the 620, that would be considered an overlay. So some loan products are being affected because of the bank that's involved. If you were to give any advice to a potential home buyer going through today's market, what would you advise as they're navigating through these times?
Well, I mean, you do the things that you would typically do. If you're getting ready to buy a house, you want to be guarding your credit. You want your credit as strong as possible. You want to try to have some money in the bank, as much reserves as possible. Your income is going to be evaluated very carefully, obviously, at this time. We know a lot of people have been unfortunately impacted by what's going on, some temporarily, hopefully, and some more than just temporary. So those things are going to be evaluated closely, but you do what you always have done. And if you call up a lender and they tell you, sorry, you can't do this particular loan because it now requires a 680, it may not be because that program across the board with every lender requires a 680. That could be a requirement of that lender. So if you're getting turned down, especially if it's score related, maybe, call more than one lender and find out if that's just pertinent to that one lender.
Got it. Understood. So as far as the process to get qualified or to get approved, what's that process like with you guys, and what should a buyer expect as they're going through that process? And why is it even important to do that now instead of after you see a house that you like?
Sure. Well, and I believe this kind of is pre the current crisis. It's always a good idea to go ahead and get pre-qualified or pre-approved, however you want to say it, prior to going out and shopping, because it's still a seller's market. You're still facing the opportunity for multiple offers and houses going quickly. So you find the right house, you're ready to make a move on it, and all of a sudden you're scrambling to get approved because the seller wants to see a letter and you haven't done any of those things ahead of time. So you want to be set up ahead of time. Number one, if there's any surprises, you have a chance to address them, fix them. Number two, if you need to move quickly, you're ready to do so. So I think that's, cart before the horse kind of stuff.
That's great advice. I mean, we get a lot of people that inquire on properties and they say, hey, can you get me in to see the house? And I say, great. That's awesome. Thank you for inquiring, number one. But number two, how far along are you in that process to see that can you even really buy it? A lot of times people think that we're just happy to open doors for people, but there's more to that process, and the education comes from talking to someone like you, verifying that they can buy the house that they like to see. So thank you for clarifying that. Is there a difference between getting pre-qualified and pre-approved? And what does that look like if there is?
Yeah. So the term pre-qualified means that somebody has looked at your basic information and made a determination that you fit within the box,
Right.
for whatever kind of loan you're getting. And usually that's a loan officer. Pre-approved typically means that somebody else has also looked and they've affirmed as well that they believe you fit inside that box. Typically that's an underwriter. An underwriter has also looked. I've seen people that were pre-approved who still got surprised and turned down because even though an underwriter has laid eyes to a file, they only see what they see. So if some documentation comes in that wasn't seen originally and it blows the file up, and the biggest thing to me is trust who is handling your loan. If a loan officer is very skilled and they know what they're doing and they tell you that you're pre-qualified, you should be pre-qualified. So again, pre-approved just means a second set of eyes have looked at it, but still it's only as good as what has been fed into the system that's being looked at.
Exactly. I definitely agree with that. As far as the, I'll kind of switch gears for a second to kind of go into current homeowners. We talked a little bit about refinances and that may change. We saw the rates kind of go haywire earlier on in March when the uncertainty in the future was starting to become real. And the interest rates spiked because a lot of people were trying to refinance all at the same time. That was making the market go like this for interest rates. For current homeowners that are having a hard time making payments, what options do they really have? Because we've heard about the CARES Act, that the Fed will essentially force the banks to allow them to either forgive or forbearance. What is all that stuff? And what can a potential seller that has an issue paying their mortgage, what options do they really have?
Sure. So I'm going to start with the whole refinance thing. And you were right. It's been the most volatile rate environment I've ever seen. Within the last 30 days, we've seen rates go as high as they've been in probably 2 or 3 years. And we've seen rates hit record lows all within a 30-day window. I think in one day, we saw like a 250 basis point movement of the mortgage-backed security market. It's crazy. So some options that people can take that aren't, on the edge and truly, at the end of their rope. Refinancing is a great option for a couple reasons. You can lower your payment. Cash out refinances can allow you to maybe beef up your cash reserves, pay off some debt to tighten things up and improve your budget. So, a lot of times people are rich in equity but poor in cash, and a cash out refinance might help you feel more secure going forward. And be cushioned against things that could happen. If you are one of those people that truly is in a bind, you can go through the forbearance, which is what you mentioned with the CARES Act. And the most important thing about that to me is forbearance means you are forbearing your payment. It's not a forgiving of your payment. It's a forbearing of your payment, which means at some point it still has to be made. And some people don't understand that. They think it's just a forgiveness. And the government made it extremely easy for people to pick up the phone and get forbearance right now. But what they didn't really explain to people is some of the ramifications of that, because at the end, that money is still coming due. And you might then have to go into a modification program, and that's not a guarantee. You have to get approved for that. So there's a lot to think about. And what people don't understand with the mortgage carriers, the banks, is that they have to make those payments to the investor, whether the payment is being made by the customer or not. So you get a ton of people that don't really need forbearance but start doing it, and all of a sudden we're going to be looking at potential bailout situations for the mortgage industry. Hopefully it never comes to that, but I mean it's creating a real liquidity issue within the industry, and it's a tool that should be there, John, for people that really need it. It shouldn't be a convenience thing.
You bring up some good points about the forbearance, and actually too, I'll kind of dig a little deeper into that. I inquired with my bank because I just wanted to know how they were responding to it. I mean, just because I don't need to apply for the forbearance, I still want to know what that process will look like should I get to the point where I need to. So I'm actually going to share my screen real quick to see kind of, so everyone can see kind of what we're looking at here. And let me pull this up. So I actually, I'll just show this information here. Hopefully it's still open here. I may have to do this real quick. Hopefully no one sees. You can see my password. So we'll come back to that another time. Basically, the long and short of it is that it gave me three options, right? Is at the end of the forbearance term, I would have to repay everything back. So imagine if, let's say you stop paying or you agree to the forbearance term next month. So that would be May 1st. So May, June, July, August, September, right? So 5 months goes by. August or October 1st rolls by, and everything that you didn't pay previously is still due, plus your next month. If you can't afford that, most people, when they go through and you approve people or qualify people, they have a debt to income ratio. If you can't afford that entire amount that is due all at once, you can apply for, we'll call it a payment plan over the course of the next year, if you will. Can you afford that additional 50% or the payment you missed plus your current mortgage payment? I'd argue it'd be really hard for people to repay that back. If you can't, at that point, you have to apply for the loan modification. Now, I came out of the short sale days in 2013 when I got into the business. You were involved heavily too. The loan modification process, that's not exactly a simple process. Even if you renegotiate your lender terms, you still have to approve for the loan modification. It's not automatically granted. What's that process like if people get to that point? What should they be able to expect?
Well, I'm not really on that side of the industry per se, but there's a lot of uncertainty there, and some of the rules may end up changing. But right now, you could put yourself in a position where now you can't come back and refinance later. It could have impacts to your credit down the road, and who knows that some of those rules might be adjusted based on the volume of people that go through this. But that's a big unknown at the moment. So I think the biggest thing is if you need it, take advantage of it. We don't want to discourage people that are truly in need of help, but at the same time, if you don't need it, don't just think that it's a convenient and fun thing to jump into because it'd be nice to miss some mortgage payments. It's more complex than that.
Got it. As a homeowner that's potentially putting their house on the market through the situation, what should they be looking for from a buyer that is seeing their home when it comes to qualification? What things would you be looking for as a potential approved buyer?
Well, I mean, I don't know that a seller can dive too deep. I mean, you would probably have to answer that a little bit more than me as far as like wanting to vet somebody up for what kind of job they have, determining if they feel like they're risky or whatever. I mean, as a lender, I'm taking a snapshot of a person right now with what I know and what's in front of me, and I'm providing a letter. And I mean, really, the seller just needs to rely on that it's a dependable, source that's providing the pre-qualification or pre-approval for the buyer, and go forward from there. I'm not sure what extra layers really should come into play.
Sure. Well, as far as validating, so whenever I get a lender letter, if I don't know them, I'll call them and I'll say, hey, thanks for submitting your letter. You've been working with Mr. Buyer about buying a house. Can you just confirm with me that you've looked at their financials or you've ran their credit? You know they have the cash to cover the purchase price. Are those questions you can answer? And would that be information that's valid that would benefit a seller? I would presume yes, but
right. Well, as I would always say, and I think you always say, use local. There's so many things that applies to, but it applies in lenders. There's a lot of good options here in this Tallahassee market for lenders that do quality work, and you want to be able to trust that somebody's been evaluated properly. If of course something could happen, something could change. We are in a crazy environment, but you want to know that somebody that knows what they're doing, who's local, invested in this market, invested in the relationships with the realtor and everybody else has given this loan a good look.
What would you, I'll kind of dig into that a little bit too, is mentioning there's some great lenders locally, and how would you choose? I mean, of course you're a little subjective, but what would make a certain loan officer or lender better than another one? A lot of times people, they think, who can get me the best rate? And that's the lender I'm going to go with. But you and I have both seen that happen where the deal ends up falling apart over not asking enough questions or really having a full scope of who the buyer is. What would you say sets certain lenders apart from the other in order to make them say, I'm actually one of the better lenders here in town?
Sure. Well, and if somebody is shopping strictly for rate, I mean, they could get on the phone and call around to a bunch of lenders day after day after day, and the answer to that question is going to change over time. So you're just going to keep hop and ship. I mean, the appetite for rates between lenders, the best price lender can literally change from day to day, week to week. So that's a moving target. What you want is somebody that is always thorough, always experienced, always, going to listen to you and listen to the needs and what you're trying to accomplish, and who is creative in applying the products. We have a certain bag of products that everybody has, very similar to each other, but how they're used. Every surgeon has the same tools, but they're not all at the same skill level. You want somebody who has a good reputation, creative, will listen to you. I mean, I would say those are the things to look for.
Absolutely. I would agree with that. And kind of wrapping this up, got a couple more questions for you. Would you say it's a good time to buy a house right now? Considering there's a lot of uncertainty, questions about, are prices going to drop? Are we going to see pre-corona pricing? What would you say is a better time? Would you wait this out? Is it a good time to buy now? What would you suggest to people that maybe are considering buying or waiting?
Well, I can only answer that from a lender's perspective, and from a lender's perspective, as long as you're still meeting the criteria, that we talked about, some of the criteria have tightened a little bit. It's a great time because rates are incredible. You can get it at a good payment. As far as other, fluctuations to the market or values or things like that, I would say you need to pick up the phone and call your realtor and have that discussion with them. So I would volley that one back to you, John.
My answer to that, if I'm going to dig into that, is you're not making a home purchase decision based off of a short-term commitment. If you're not planning on being in a particular market or in that house for several years, it's probably not good for you to be buying in any market. If you're thinking about relocating or moving or changing your situation personally or professionally, don't buy the house. Motivation drives the market first and foremost. I think the average homeowner now owns their home between 7 and 10 years before they make another move. So, I mean, I know where I was 10 years ago. In 2010, I was just graduating college. I had no way to think that I would be doing what I'm doing today. So things can change a lot in 7 to 10 years. And I would not make that decision lightly. So if you can qualify and your motivation is to be in that particular area for some time, then yes, it sounds like it's a great time to buy. And inventory is still low. That's probably the biggest determinant between comparing our last recession and this one, if we're going to call it that, is the loan qualifications were different then, and the inventory is different now than it was then. So I would argue that as long as you're making a smart decision for yourself and for your family, I'd say it's a great time to buy if it's right for you. If you're not comfortable, then stay where you are. But anyways,
I like what you said about there's a different mind frame there if you're thinking about it just like an investor would, or you're thinking about it as home ownership. Because I agree with you. I mean, because people that own rentals, your investors, they're being heavily impacted by this as well. What happens if suddenly they decide to sell or do something different with that house you're living in? There's a lot of security in knowing that you own your house and you're driving that ship. Your payment's not suddenly going to change because somebody changed rent on you, or so there's a lot of security in home ownership, and right now that could be more important than ever.
I mean, you still need a place to live regardless whether you're owning or renting. There's no middle ground. So if you can qualify to buy and your financial position supports it, I would say yes. And that's where I'd say, thinking 2-3 steps ahead, however this does play out one way or another, you should not be making decisions that you're not comfortable with financially. If you can't afford to buy that house, don't buy that house. Don't push your budget. Don't stretch your ratio. And it's also for tax purposes, for building equity purposes. There's a crutch in our industry. We talk a lot about equity building being a huge part about buying a home, which is, of course, is a huge thing. But I saw an article recently where 2/3 of the middle class's wealth is tied up in equity. There's not a lot of cash. There's not a lot of stock ownership. There's not a lot of business ownership. It's basically equity is wealth. And so I would hope that during this time, the middle class can readjust their strategy for wealth building, but not depending on equity, but also diversifying their portfolio. Makes it more attractive to a lender if you are going to buy a house. But if you are going to consider renting or buying, if you can't afford to buy, market sounds like it is still attractive to buy. I'd say the biggest driver that people may think is, well, am I buying a house today and it's be worth $100,000 less tomorrow? I would argue that, again, motivation, inventory, demand drives the market, not speculation. It's not like the stock market where you'll see 20% drops one way or another, which is what's been happening. But either way, I've been talking too much. This is your interview, not mine. So as far as I know, you have a specialty that most lenders don't offer, and that's the renovation financing. So actually, my first house that I bought was using you as my lender, and I did the FHA 203K renovation loan. I financed the roof, I financed flooring, I financed the water heater. I didn't have the cash to spend those things out of pocket, and I bought a foreclosure. So there's a great opportunity to be able to finance those items into the loan. Are there multiple loan products today? Are those being affected at all? If you want to dig deeper into that, I'm sure people that may be considering making improvements on their next home may want to understand how that process works.
Yeah, sure. And on purchases, it can be used just like you used it, John, where we take the price of the home, we roll in the cost of renovating or repairs, put it right on top. And the loan is based on that total amount instead of just the price of the home. The appraisal is based on that, everything. And there are multiple products. We have a FHA, the 203K, like you used, actually two versions of that. We have a conventional product, and we even have a VA product. Now, as I mentioned earlier, the VA made some changes to appraisals right now, including putting a halt to VA renovation appraisals. So they kind of have put the brakes on the VA renovation product at the moment, but that will come back as soon as the VA allows those appraisals to move forward. And the other products, they're still in play, still doing loans for people on reno right now. It's a really good time, especially if you were buying a house and maybe it was some cosmetic things and you were thinking about doing them yourself. Might be a good time to conserve that cash and just roll it into the mortgage.
That's a great point. I'll kind of mention, what about for current homeowners? If you own your home now or you have a payment now on your house with a mortgage, is there a product available for them to maybe do some renovations into their current home? And is that available for them too?
Yep, absolutely. Same products come into play. And let's say somebody owns a house and it's a $300,000 house and they owe 150 and they want to do $75,000 worth of work to it. I probably wouldn't put them in a renovation mortgage. We would talk about a cash out or maybe a home equity line, something like that. But let's say they own a house that's worth 300 and they owe 220 on it and they want to go pull $75,000 out to do work on the home. There's not enough equity to do cash out refinance, home equity line, any of those things. Right. On a refinance with a renovation product, we are providing the bid for the work and the specs of the work right up front. The appraiser is considering it. So that $300,000 house now hopefully is going to appraise for 330, 340, 350, whatever value is being added by the work. So we get to leverage that additional equity created by the work right up front, and we get to go to a higher loan to value. So it's a great way to squeeze more juice out of the orange, more equity out of the house.
That's excellent. It's a great product, and especially if you've been looking about doing some major renovations or improvements, but don't have the cash, we have the equity. It's a great opportunity to improve your home's value and to get a better product in the end, or cash out. So, Ron, you are the man. I really appreciate taking the time to go through these questions. Hopefully, it's provided our audience some reassurance in the market and some questions answered they may have been thinking about or not really knowing where to answer from. I would rather have somebody hear from a lender directly in this situation, considering the headlines are scary and the headlines are uncertain and changing every day. But the reality is the market's moving forward positively. And while there are slight changes being made, they're benefiting everybody in the end. And it's designed to protect the market as well as the lenders and the consumer to make sure that they're buying a house they can afford. But we're not cutting off availability for funding. That's not going away. You may just have to, sounds like, have better credit. But that's really a good thing, having better restrictions for people that shouldn't be able to buy in the first place. So anything else you want to add before we wrap up?
No, I want to thank you for taking the time and having me today. And if anybody has anything more specific they want to get into, I am here local. My number is 850-228-5125. And people can reach out at any time if they want to talk about a specific scenario.
Of course, and I'll post your contact information in wherever this does get posted so people can reach out if they have any questions. But I appreciate your time, Ron, and keep on keeping on.
All right, buddy. Good to see you.
See ya.